All right, well, let me go ahead and change my background here. I got the wrong one up, but there we go. So anyway, good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome to Trading Coach's Playbook. My name is Brandon Wendell, and welcome everyone. I'm getting everything set up here. We're getting the chat. So welcome, Will. How you doing? Morning, Bert, and everyone. Anyway, so before we get started, just need to remind everyone, welcome, William and Helen. Let's see what else we got. Kevin, everybody, welcome. Just need to remind you, we are not traders. We are traders. We are not broker dealers or investment advisors. We're going to take a look at all this information from an educational standpoint, not telling you to buy, sell, or hold in particular securities or giving any personalized recommendations. There's always risk involved in the markets. Keep that in mind as you are looking at these markets. You can always lose money. So we're going to do what we can to try to minimize risk and manage it, but we can never eliminate it. Also, we're not subject to trading restrictions, so we can have a position in security or initiate one at any time. Anyway, we do have a lot of free workshops as well as online premium workshops, and you can see some of the scheduling there. And oh, hang on a second. Anyway, so yeah, basically, if you want to join us, we do a lot of things. I'm pretty active, as I was just right now. As a matter of fact, I was working on one of my courses. I teach multiple courses for Wealth Builders HQ, and one of those is, let me show you real quick here. If I go into my members area, the E-mini Think Tank, I actually do that on Monday, Wednesday, and Thursday. So if you want to hear more about the markets and how they work and see it in a live manner where we're actually dissecting the markets and trading live, you can join me for that E-mini Think Tank. You just click on the link and you can sign up for that. We actually have a 2-week free trial if you do a quarterly subscription. The nice thing is it's kind of a multi-portion program, if you will, where part of it is where we do live trading 3 days a week or look at the markets live. I'm in a simulated mode for legal reasons, but basically Monday, Wednesday, and Thursdays from 9 a.m. to 11 a.m. we get together and dissect the futures market. The other part of this is self-contained, or I should say on-demand education, where if you go in, you see those class recordings, those are the live sessions we did, but there's educational videos as well. And in the bonus educational videos, I basically teach you how to trade those futures markets in some advanced methods. So it's kind of neat getting you a little bit more involved with the markets and how to trade it properly. And there's also documentation that supports it, goes along with it. So I'm pretty busy with that. And actually what I was just working on and still am, if I go back to my dashboard here, is another program also somewhat related with futures, but a little different. It's called Wealth with Spreads. And I'm literally doing all my work for the Wealth with Spreads right now. I can show you a little bit about what I do there, but what we deal with are futures again, but a different manner. And I've talked about this in the past. It's called futures spread trading. So you'll see if I go into my futures educational videos, there's some videos on how to trade spreads. And basically what I'm looking at when I'm trading spreads is I'm trying to take advantage of related securities as they move. So for instance, this is a chart I'm putting together right now where I've got, actually, let's do the next one rather than this one. I've got gold versus platinum I need to put together. So normally when you look at a chart, you're looking at one security, right? So I go gold, here's GC, and I'll look at the December contract. So let's bring that one up real quick. So there is a contract, or I should say a chart on gold. I happen to be now on a 30-minute. I'll go to a daily chart. Doesn't really matter. And let me clean up the chart. So typically when we're trading, we're doing what's called directional trading. And you're taking advantage of the price movements of that security, whether it be up or down. If you're going to go up, you would buy the contract. If it's going to go down, you would short the contract. Well, the problem, well, not necessarily a problem, but one of the issues you might have when you're trading these types of securities is the cost. So for instance, if I go out to, whoops, wrong button, right here. Oh, wait, no, I actually have the program open. So if I go to my program right here, where is it? Margin calculator. That's what I wanted. Let me bring back this. There we go. So if I just wanted to trade gold, oh, what happened here? What's going on with this? That's why. Cancel that. Back to where it was. I was trying to place orders. So if I go into my order routing here, you can see I'm going to go ahead and delete this one, and I'm going to look at gold, GCZ 22. What happened there? Oh, GGC 22. That's why. I had to type in the right symbol. So if I want to trade one gold contract, you can see the margin is $7,150. That's the overnight margin. Intraday, obviously, there's going to be different margins for that. But what I can do is what's called an intra-market spread. Now, when you look at something like gold, there's multiple contracts being traded all at once. You know, if I go out to right here, the CME Group website, and we take a look at gold, I go to the quotes page, and you can see we've got quotes on multiple securities. We've got September, October, November, December, February, April, June, and so on. Well, obviously, we want to trade the one that has the most activity and the most volume. That's going to be called our front month contract. So even though there are other contracts available, you can see the difference in volume here, much, much different. So we typically want to trade the one with the most volume because it'll get the best moves. Okay, you can take a look at the, actually any of those before it. You got 500 contracts here, 6,000 here, 23, and then 131,000. Gold is up today, but notice which one is moving the furthest and fastest. Well, you can see 7.7 points to the upside versus only 6.7 because it has less volume. 5.6 because of less volume. Even this one, which has less volume, is not moving up quite as much, is it? Now, there are exceptions. You can see going up to June has a much bigger move. But for the most part, the near contract, the front month contract with the most volume is going to give you the best move in the direction of trend. But other contracts also move. They just don't move as much. So what I can do is that what's called a spread, where I'll trade the two against each other. So meanwhile, both contracts are moving, one moves faster than the other typically. So let's do December and February. So going back to my charts and bringing in, I'll do a new chart here. So again, we do the gold December, and I'm going to bring in, there it is, gold February as a spread. It should bring up that chart. There it is. Now it's showing it as a line chart. I can change it to candlestick if I choose to. Okay, but it might look a little weird. You can see it's probably easier sometimes for the line chart. But what happens here is we're basically trading the price difference between those two. And since they're both moving up, I mean, let's go back to the pricing today. The December contract moved up 7.7, but the February only moved up 7.2. That means that it may basically moved up half a point faster on the December contract than you did on the February contract. And that's what the chart is showing here. It's the price difference between the two. That's it. So today, if I were to look at probably intraday, let's go down to a 15-minute time frame, perhaps. Excuse me. And I could probably go to the candlestick. Let's see. Yeah, depending on where the prior day cutoff is, we moved up half a point today. Okay. So how do we trade that? Well, again, you would buy one and sell the other at the same time. We buy the December contract, short the February contract, and we would have made money on the long. We would have lost money on the short, but we would have made more than we lost. It's a net profit. Now, why the heck would you want to do all this? Well, again, if we're holding gold overnight, one contract is $7,100. Let me zoom in a little bit so we can see that better. Now, if I add in GC, oops, again, I do the right one. GGC, what is it? F, or no, we want G, 23, February. And if I'm shorting that one, now look at the overnight margin. And that's not a mistype. We just went from several $1,000s to being able to hold that position for only 220 bucks. Well, it doesn't make as much money, right? We're making half a point, 50 bucks. Versus if we made 7 points on the full size contract, right? So our risk isn't as high, the reward's not as high, but we also don't have to put up as much cash. So let's figure that out, what our rate of return would have been today. Think about this. If you did an overnight trade and you had a margin of 220, but you made 50 bucks, that is a 22, we'll call it 23% rate of return. Not bad, right? Now, what if we had done the full size contract by itself, again, that's $71.50, and we would have made $770. Let's see, overnight margin is $71.50. So the rate of return is only 10%. See the difference? So if we had done this as a spread, even though we only made $50, we only had to put up $220 as a trade. And here, let me put it this way, kind of show you. So spread, which would have been long GCZ 22, short GCG 23. Okay, the margin was $220, and the profit was only $50. Not great, right? But the rate of return was, what did we say, 26%, something like that? I don't remember exactly what it was. Anyway, that's pretty good. Now, if we compare that to long GCZ 22, just holding one contract by itself, margin went to $71.50 for that. Profit went to $770, and the rate of return was basically 10%. So you could see with the spread, I can make more money percentage wise. You know, if I wanted to make more money dollar wise, all I have to do is add more contracts. I'm still going to be less for my cost of carry than I should say margin, not margining. Anyway, but you get the idea. So that's one of the reasons why I love spreads. Plus, they're much higher probability of profit compared to directional trading. So the cost of carry is much lower. You get some good opportunities there. Now, let's go and change this a little bit here. Where's that gold trade? This one, I'm going to delete that. Most of these trades are done overnight. They're swing trades for spreads. Yeah, they're very rarely done intraday. As a matter of fact, I'm going through a list right now trying to find trade opportunities, and I do it multiple ways. One of the ways is I subscribe to the service called MRCI, and what I can do there is they give me some trade ideas. For instance, this is what I'm working on right now, gold versus platinum. Now, you also, when you do, remember what I showed you before was gold versus gold. That's called an intra-market spread, where you're basically trading the same security against itself. Okay, and I should be SPREAD for spread. I mistyped everywhere. Anyway, so there you see again, that's an intra-market spread because I'm using the same security. Now we can do what's called an inter-market spread. Here we're going to be dealing with gold versus platinum, but there's a little bit of a trick to this because if you do the charts wrong, you know, I'm actually going to create the chart now. You get the wrong data if you do the wrong chart. So first, I'm going to do new chart. I'm going to bring up that gold for December. There it is. But I'm going to take it against platinum. So here we go, PL3. And I believe it was 2023. Let's see, what month am I looking for here? This is the January contract, so F. Oh, sorry, 01 in this case. So I'm using the January platinum contract. Now, what I have to do is make sure I use the right number of contracts because of the way gold and platinum move. I'm actually using 2 platinum contracts for every 1 gold contract. And part of the reason why is the point value. We have the multiplier, which is the point value. A point value for gold is 100. The point value for platinum is only 50. So I have to make sure that the contracts are somewhat equal. So I'm making profits, not because they're both moving up or down, but because the rate of movement between them is different. That's the spread. That's all I'm trying to do is profit on that change between the two. So I'm going to change this to a daily chart and zoom back out, and there's my chart. Now, typically when I look at an intermarket spread, I can go to candlesticks and look at that. And I charted like anything else. I mean, we got my normal moves that we're looking for, and this one happens to be a spread trade opportunity I'm looking for. Where I can, well, actually, this was a buy, I believe, right? Let me see, what was the recommendation here? Yep, it was buying gold, selling platinum, getting in on the 15th of September, exiting about a month later on the 16th of October. So we're supposedly in this trade for about a month. And there's multiple ways of identifying when to get in and when to get out. I have supply and demand as I normally do on trades. And I even have other tools I can use, such as Bollinger Bands. if you know anything about Bollinger Bands, often, not always, but often, if you have a close outside the band like this, you're trending to the downside right there. And then when you close back in the band, often prices will rally all the way back up to the midpoint and even up to the upper band. So that becomes a trade opportunity right here, where after that close above, I can enter long on the next candle. So we had close below, close above, that's the trigger. There's the entry, target 1, target 2, and it works. You can see it doesn't always work though. So right here, we had close below, close above, entry long, target 1 was hit, but it never made it to target 2. And then if you're patient, there's another opportunity, close below, close above, entry on the next contract, or sorry, next candle right there. And that rallied all the way up to the top. So that's one of the things I'll be waiting for, is to see if this does close below, close above, we might get a rally. So yeah, these are done for swing trades typically. Could you day trade spreads? Absolutely you could. It's not something that's commonly done though. So for instance, if I go and create a new chart here, if you ever watch the Nasdaq versus the Dow, they don't move at the same pace. Actually, I'll do it over here. So if I wanted to, I can look at the Nasdaq and I happen to be on a 15-minute time frame. Okay, so right now the Nasdaq's moving. As a matter of fact, there's a better way to look at it. I keep a percent change chart right here all the time. So going from this morning and 9:30 this morning, where is it? 9:30, there we are. Zero it out. There we go. And basically from 9:30 this morning, when the markets opened, we could see the Nasdaq led us a bit to the upside while the Dow was lagging, wasn't it? Hasn't moved up as much. At our peak, I don't know exactly what it was here, but we can find out. It's about 0.88% to the upside, but the Dow had only gone up half of that. So if we wanted to, yeah, we could do an intraday spread trade. So what we have to do though is take a look at the Dow versus Nasdaq. So here's the Nasdaq, and I can chart this NQU 2022 minus YMU 2022. Now I'm not done, because if I try to compare the Dow versus Nasdaq, it's not going to be giving me the correct chart. What I need to do is look at what's called a notional value. Okay. How to do the comparison view on TradingView? That's pretty easy, actually. You bring up a chart and then you see the little plus sign next to it. That's comparison. So you change it to a line chart and just add in additional securities one by one. What's going on out there? Here's some birds, some baby birds. Anyway, so what I have to do is what's called notional value. This right now, we're looking at the market value of the Nasdaq. The market value is 12,536. That's how much you buy the contract for. But if you want to know how much the contract is worth, you use notional value. And basically notional value is pretty simple. It is the market value times the point value. It's basically what that contract is worth. So if I want to know what the notional value is of the Nasdaq, I just change my chart a little bit and say, okay, NQU 2022 times 20, because it's $20 a point. And the notional value of one contract of the Nasdaq is $250,000. That's basically what you're buying. It's $250,000 worth of stocks when you buy a futures contract on the Nasdaq. So you need to use notional values when you're computing spreads to get you better quotes, basically. So I'm going to do that. I'm going to do the notional value of NASDAQ minus the notional value of the Dow. And that would be times 5. And there is my spread chart. What this is showing me right now, let me clean up my chart. This is showing me the price difference between the notional value of the NASDAQ minus the notional value of the Dow. That's it. And if I look at this from this morning, am I on a 5-minute, 15-minute? I'll go to a 5-minute chart. And I'll go to this morning at 9:30. Here we are. And notice this morning, if I thought the market was going to rally, but I know typically the Nasdaq leads the Dow, right? And we saw that on a percent change chart right here, and it does it often. So there's a couple of ways of trading this. One, right there at the beginning of the day, you can see the Nasdaq took off, and by 11:35, the Nasdaq went up twice as much as the Dow did. So if I knew that was likely to happen, and how would I know it's likely to happen? It happens almost every day. It really does. You take a look back at the at yesterday, for instance. Where are we here? 5-minute chart takes a little while. 9:30, right there. And you look at yesterday's price action, we rallied, and look at that, by 11:30 in the morning, the Nasdaq had moved up about 2%. The Dow had only moved up 1.35%. So you can see this is pretty typical. It happens almost every day. So one way of trading this would have been buy the Nasdaq, sell the Dow. Now, what if they both moved up at the same rate or moved down at the same rate? You wouldn't make any money, right? So what we're doing here is we're literally looking at long NQ, short YM. Okay. Now, if the Nasdaq moves up faster than the Dow, then this chart would move up, and there it went. So yeah, you could definitely day trade these. It's not commonly done, but it's definitely something you can do. And what was it? 11:35 was the peak, pretty much right there. Oops, wrong way. Like that. Now it's kind of hard to measure the peak and know when to get out, but there are tools you can use to do that. I actually do this. Okay. So anyway, what happened here was you would have bought at the open, which is, let's see, what was the open today? 88,635, and the target would have been the close of that candle. And again, let me get the actual value here. Snap 2. There we go. And the nice thing is it'll tell me exactly, because it's notional value, each $1 move on this is worth $1. So we went to 90860. We had entered at 88,635. That's a $2,200 move today. Pretty cool. Now, since we know that normally happens, what happens in the afternoon though? Because remember, what happens is that the Nasdaq usually rallies further and faster. Oh, by the way, before I go any further, let's see how much that spread would have cost you. Because that's always good to know too, right? If we had taken that spread, NQU 22 versus YM, -1. That one's a little expensive. Overnight is 13,200, but that's still cheaper than holding the Nasdaq overnight at 16,000, right? So for both contracts, now you might be able to get day trading margins on that too, but if you held overnight, both contracts would have only cost you 13,200 to hold overnight. So that's cheaper. So yeah, this is a spread trade. So what happened was, let's see, from yesterday, remember the spread widened, and then by about 11:20, it narrowed again before the end of the day. Let's see where it ended up. There's 9:30 here again. So I'm just showing you what happened yesterday. There it is, 4 o'clock. 1600 is right there. And yeah, they came back together. Look at that, by 4 o'clock. So what if we did the opposite now? At 11:20, again, we can do the same thing right now too. We saw how they moved apart, and now they're coming back together. So what we could have done, and we could have done this yesterday just as easily as we are today. So let me go back to yesterday's and show you that one first. September 8th, there we are, 9:30. It was about 11:15, and then the end of the day. So, like I said, if we knew at the beginning of the day the Nasdaq was going to take off compared to the Dow, we could have gone long on the Nasdaq, shorted the Dow, and there's your move up. So that would have been a nice trade as we went from 86,460 to, I'll use this one right here. Oh, wow, starting to rain heavily here. Anyway, there you go. So that moved up quite a bit, and the profit on that spread intraday, 88,620 minus 86,460, that would have been $2,100. But now this is where it gets even better. since we know the Nasdaq outpaced the Dow to the upside, for the end of the day, they're likely to come back together. So what we would do here is short the Nasdaq. Actually, it's not short, it's really just sell NQ. At the same time, you buy YM. And what would have happened? Okay, well, let's find out. Right there, we're getting in. And by the end of the day, 4 o'clock, there we are. So maybe we get out a little before 4 o'clock. You can see right there, it's starting to bounce. Oh, that's not what I wanted. It's right there. Maybe we get out. So we could have made money that way because, again, you would have sold the Nasdaq, bought the Dow, and it moved back down almost the same amount, like $2,000. So we could do that today. Yesterday would have done really well. Today, let's see how it would be doing. Okay, at 11:30. Clean this up. Same transaction. Sell NQ. Long or buy YM. Now, I'm not taking the live trade right now, but I could. And it's a little late to get in now, but it was at 11:35 where we were very far apart this morning, and we're likely to come back down to, well, maybe even demand. Right, here's the demand zone. You got rally. Oh, wait, sorry, it's 2 candles there. Rally, base, rally, right? So we could have shorted down to that target. Okay, so you'd be getting in maybe on the close of this candle, the beginning of the next one. So you're getting in right around, well, I'm too late to get in, otherwise I would, but it's 98.60, and you'd be targeting 89.425. And I can set this all up with stops and everything too. It's pretty cool for an intraday spread. So 908.60 is where we're getting in. We're targeting 89.425. So we're looking at about $1,400 potential profit. I can take about a $500 risk here. And that's what I would do, is just place my stop above by $500. And there it is, making money already. So spread trades are pretty cool. And like I said, you can reduce your risk. Heck, I can even reduce it more. Watch this. We were talking about the margins. That was on the full-size NASDAQ and the Dow. What if we did the micro NASDAQ and micro Dow? That's weird. It's actually $1,320. Yeah. So very small cost to hold overnight for the micros, for both of those. That's your cost. Now, you won't make as much money, but again, there's good opportunities there. So yeah, I can just simply place the trade. What I would be doing then is going into my charts here. I think this one, I won't be able to do it as a commodity spread because they don't recognize it. If I do NQ, now I see you can't do that. If I did gold, like GGCZ 22, what's going on here? Oh, and future spread. The time spreads are easy to do on the program typically. So there's GGC. So if I wanted to, I can just change the months. Let's say I want to do that Z22 and I want February 23. There we go. That's a gold time spread. So when I look at my order routing here, you can see I can put in an order to buy gold December versus February, use it as a limit order to get in. I can put in my target and my stop loss as good till cancel orders and just let them go. And that's typically what I try to do. So if I want to do the Dow versus NASDAQ, unfortunately, that one I have to do it a little differently. I have to do what's called a parked order entry right here. So for that one, I manually have to enter. So I was looking at selling the NASDAQ NQU22. There it is. And I don't need these last two right now. So let me delete. Delete. There we go. And at the same time, I'm going to trade one Dow. There it is. So I do this, click both of those and submit. And there it is. I'm in. So what I've just done now is I entered a short on the NASDAQ and I entered a long on the Dow at the same time. So unfortunately, because these parked order entries and the way these are not what they call recognized orders, that's weird. I actually have to put them in manually, but I'm in. And what I'm doing right now is if this continues to drop in price by the end of the day, I would exit the trade and hopefully make a profit. So it's kind of neat. The neat thing about these spreads is I can make money when markets go up or down or sideways. It really doesn't make a difference as long as the prices move in relationship to each other. So kind of went on a little sidetrack there, but that's kind of cool. Anyway, let's see. Got a question here from Brenda. Let's see. When I have time, can I explain how to use 889 in a 1 hour chart? Well, that's a strategy that I set up, and I don't want to give away too much here in the free workshop. But if you go to my educational videos, actually, you'll see it both in the Wealth with Spreads and also in my E-mini think tank. But in the Wealth with Spreads program, you see right here, I've got 889 strategy. I've got a full video on how to use that strategy, as well as documentation with it for the 889 rules. So it's a strategy that I created many, many years ago. Let me go ahead and bring up those moving averages. Here's 8, and we'll edit this one. Since 2011, yeah, I think it's been since then. It's been a long time. So there we go, change this to 89. It's basically just 2 moving averages. I'm using it to try to capture wave 3 in an Elliott wave. So yeah, I can use this for any time frame and any security, including the spreads. Ooh, man, that, I don't know if you heard that thunder. It's like right outside. But anyway, what happens is, I'm not going to go through all the details right this moment. Oh, you just saw it in OTA Mumbai? Yeah, I was in India from 2010 to 2012. So right here, we have an area of demand, rally-based rally, right there. And what happens is you get that crossover. I do not enter on crossovers of moving averages. The crossover always happens late. It happens after the best entry, because you can see you would have been getting in here on this candle. That's too late, right? So what I do is I'm actually going to wait after the crossover. I'm going to wait for a retest of a zone and a bounce off the moving average. So right there, we had both. We had a test of the moving average and the demand zone being hit. And we're okay on the RSI. It's something I also follow. So I would have entered along here with, let's see, the target. Oh, there's a supply zone, I think. Yep, rally base drop right there. Let's fix that. So there's a good supply. This one, not quite as good. Actually, neither one of them is great, but that would work potentially. So what we have is entry, stop loss would go below. Somewhere right in here, below the zone. And we got our target. So we got about a 3-to-1 reward to risk here, I believe. Let's check. Oh, wait, wrong one. This one. Nope, that's not it either. There it is. Long position. Stop loss. Target. There we go. Let me just extend that out. That's weird. It doesn't extend. That's okay. Anyway, what happens here is there's the bounce. It actually bounced twice and made it up to the target. But that's it. It's a pretty simple strategy. I see that crossover and it alerts me that that's happening. Now, I also got to look at the higher time frame trend, but you can see this is on a 1 hour chart. Entry would have been made here on the 8th at 8 a.m. And I don't care too much about time. I just hold on until the exit tells me to get out. That would have been a day later, 9 a.m. on the 9th. I would have been exiting. So it was definitely a swing trade holding overnight. But yeah, it's a pretty simple strategy. Now, what I can also do, since I'm talking about the spreads, like I said, I can do this on any security, any time frame. Right here, I've got inter-market spreads, and I'm looking at continuous contracts. So what I can do is simply run through the list and see, are we setting up for any trades? Unfortunately, this one is already hit. Not sure when the crossover. Wow, it's way back there for the crossover. There's your first test. So no trade opportunity. Actually, I can go out to 4-hour or daily time frames. And the reason why I do that is just look for trades. So this one is still potentially valid for an 889 trade. This is corn versus soy. And what I would look for is a retest. Let me just make sure the high here is 71.6. The close is 71. So that closed above. But there's my zone, rally-based rally, and we might even be meeting up at the moving average at the same time. So I potentially have an opportunity to buy there. So if I go, let me just show you here real quick, Excel, I track all my trades, obviously. So September is still pretty new. I don't really have a lot of stats for September, but I can kind of show you the reason why I love spread trading so much is because of the way they work. Here's the trades I picked out for last week. I'm doing this week's trade ideas right now. So I put together the videos on Friday. So this one's not set up yet. We don't have any stats, but let me go back. Hang on. And we got August here. So all my trades are tracked that I put out in the ideas. And you can see we had a high win percentage. This is actually a much higher win percentage here than I do on any other trading that I do. So my average win is also much larger than my average loss, but we had a 75% win rate. And you can see the wins, it took a pretty good job to do that. Now, to do all the trades, because we're holding overnight, you need to have about $25,000. You don't have to do all the trades, though. You can see the margin. Some of them are quite large right there. Some of them are smaller, 5,500, 1,100, 900, 550, 275. So pretty good opportunities there. You had to stop trading that way because there's no stop loss. Well, you're supposed to use stop losses no matter what. Notice right here, I've got 3 columns. I'll show you this one. We've got the entry, but the main thing is stop loss and then rewards. So every single trade I take, I identify how much risk I'm going to have per contract. And typically I also try to identify the reward per contract if I can. So we know before we get in exactly what kind of trade we're getting into, how much we're going to risk, how much we're going to make. And we understand that there is risk involved in all these trades, but because the win rate is typically pretty high, let me get July in here too, because there's still open trades. Oh, I'm sorry, that was July. This is August. August, the win rate wasn't as high. We're also, a lot of trades haven't hit yet. So there's a lot of open positions yet. But yeah, they're doing very, very well. And if I go back in time, like I said, July was incredibly well because those ones have all finished. If I go into, let's see, wealth with spreads, just to give you an idea. Where's June? There it is, June 2020. Oh, it's July again. Open. June 2022. There it is. This one was pretty good too. 75% win rate again. And you can see that if you'd taken all the trades, there were 21 winners, 7 losers, 8 no entries. So it did pretty well. And that's pretty simple, pretty common for most of my trading that I do when it comes to spreads. They're pretty consistently profitable. So that's why I do them. Anyway, but the way I do this, as I was mentioning, I'm putting together a video right now. What I do is every Friday I put together a video. I actually submit it and have it released on Saturday. And I'll have anywhere from minimum of 4 trade ideas all the way up to maybe 8 to 10 trade ideas. And those go into, I'll just show you right here. You're afraid to go live? Try it in demo first. Always practice first. And then when you go live, you can always do micros instead of the full-size contracts. But right here in the, let's see, wealth with spreads, trade ideas and videos, you've got a video right here that I put out last week, and there'll be another one for Sunday. It'll come out tomorrow. And there's a PDF that goes along with it. And the PDF is basically what I use in the video. That's what I'm putting together right now with the trade ideas. And I walk you through the trade. As a matter of fact, let me just show you real quick. If I go to, get rid of that, go to this. Which one is it? Oops, wrong one. Right here. This is the one I'm working on right now, September 11th to September 16th. So I put out the trade idea. And I even talk about where I'm entering, where I'm exiting, how I'm going to manage the trade in multiple time frames, and how to, deal with the trade, how to place the trade order. So right there, I put in the order type and show you all of the steps. I walk you through it. And this one's a little bit different because it says HE, but there's a minus sign there. So not to confuse everybody, I showed them what actually happens when you put in that trade. And that's it. And then I go on to the next one. So it's kind of a neat program. And then once you get the video, you can, again, you get all the trade ideas on Saturday. So that way Sunday, you're ready to start when the market's open. Then what happens is if you opt in right here for SMS text, when the trade hits, that's not going, why not? I'm already opted in, but what'll happen is you'll see these are text messages that you get. So for today, some of the text came out saying, hey, look, we got an entry near, get ready to get in if we hit that demand zone. Or right here, this one needed to book some profits and move the stop loss. So there are text messages that come out real time throughout the day that alert you when you need to make adjustments on the trades or when you need to enter into the trades. So it's kind of a neat thing that I do. But yeah, if you close your accounts in anger, you got to make sure you're over the anger before you get back in and just practice with simulated. Okay. So yeah, missed seasonal trades. It all talks about that in the program. I explain why we would take a trade or why we would not take a trade. But what happens is many of these trades have seasonal windows. For instance, here in August, you'll see on this page. So what's happening is I'm looking to get into a trade either based on a certain day or a certain price action. So if it doesn't happen before the end of the session, you know, right here, this one is supposed to be getting out on September 13th. We're near the entry right now, but if we don't hit the entry in time before September 13th, which is kind of close, we're probably going to cancel that trade because what happens is the seasonal window closes. The thing you got to understand about securities and actually futures and spreads in general, they're seasonal. You know, prices go through seasonal moves where they do certain things at certain times. So if you're not familiar with those seasons, unfortunately, it costs money to get the seasonal information. I happen to use MRCI as one of my resources. I also use Season Algo for another one. But what happens, for instance, if I go into MRCI, yeah, I can go into right here, spread seasonal patterns. And if there's a particular security, let's go back to the Nasdaq example, indices. I go to Nasdaq right here. It doesn't have inter-market examples, but it has intra. So I can see NASDAQ. If I'm going to trade the December versus March, or let's do September versus March, since we're in the September contract right now, I can look to see historically, how does that market normally trade? And it'll give me the patterns, and I can look for right here. You can see in the last 15 years, there's been a good rally. If I traded that in March to April. Okay, well, that's not right now. I'd look at the current time and figure out when's the best time to trade some of these. But there are certain windows or seasonal windows that's best to trade certain securities. Now, I don't necessarily need to go through every single one of these to figure it out. That's the nice thing about the program. You know, when you enroll in the Wealth with Spreads, I do all the heavy lifting. I find all the trade opportunities. I detail them out for you, and I even text you when it's time to adjust or get into those trades. So all you have to do is just follow along with the text. Obviously, you need to learn what you're doing. So that's why I have the educational videos teaching you how to put in those trades properly, what spread trading is all about, and even how to chart them using certain software like Omega charts. That's what I'm doing right here, is I'm creating those charts. That way I can analyze and show everybody what I'm looking at. Yes, I still use another program called SeasonX, but I can't use it for spreads. It's only for seasonal for individual securities. So as a matter of fact, if I were to go in, right now, I'm trying to figure out what's going on in the S&P and the Nasdaq. I can log in on some of these programs that I have access to. Can you chart on Trade Pro futures? You're talking about Trade Pro? Yeah. I use for charting for Trade Pro. I actually use this, which is Trading View, and you can link it to your Trade Pro account. That's probably the easiest thing to do. So anyway, I'm going here to my popular instruments, and I can take a look at the S&P 500. Everything is seasonal, so it's not just spreads, but individual securities. For instance, right here, if I go into, what's today's date? The 9th of September. I can look at the last, let's say 25 years. And from the 9th of September for the next week, hit the wrong spot there. Hang on. It's the right date. 9th of September until the 16th. Seasonally, the market moves up about 68% of the time over the last 25 years. That's not the best, but it moves up very little, about 0.75%, maybe a little less. But here's something interesting. The 16th of September until early October, for the last 25 years, looks like the market dropped, although it's only 52%. It's not a high enough percentage. I want to find patterns where the markets do a certain thing over and over and over again with a high probability. Right there. So you got from September 16th, September 28th, 70% of the time the market drops, and it drops over 1%. That's a good thing to know if I wanted to trade the S&P or if I want to trade the Nasdaq. I look to see what are the seasonal patterns there. In the last 10 years, same thing, 16th through the 28th, 60% of the time the market drops about 1%. So I can track some of these things and get an idea of what is the highest probability from a price movement by understanding the seasonality of these markets. So that's kind of neat. Anyway, if you're interested in learning more about seasonality, obviously you can join me in the Wealth with Spreads program. If you're interested in getting this MRCI online, you can always sign up with them. You just go to mrci.com. And if you happen to use my code, which is the word wealth and Brandon, you'll get 10% off. This is for mrci.com. You see 10% off. I'll put it in the chat there. It's not necessary to go out and use that unless you really need it. But, like I said, probably one of the easier things, especially if you don't understand what seasonality is all about and how to trade spreads, is come join me in the Wealth with Spreads program and you'll learn how to do all that stuff. Okay. Anyway, kind of getting back to the question about, using this 889 strategy, I can pretty much use this on any security in any time frame. As you see, I'm identifying a possible opportunity here on corn and soy. Now, I do need the specific contracts to trade. So for that, I would actually change this. These are open continuous contracts. So I'm going to do, I think we're in Z22. So let me just verify. Actually, I'm going to verify it this way. I always want to make sure I'm trading the right contracts because of the volume. Well, it is pouring out now. Hopefully the internet stays up. I'll apologize. My power went out yesterday too. So anyway, if I go to, run the grains right here. Well, actually, let me just get it detailed. But if I look at corn, yep, looks like December is the main contract. Same thing with, soybeans, it's actually November. So if I'm going back here to corn versus soybeans, I need November contract versus December for the right spread. So there I am looking at the specific contracts for the spreads. And it looks as though I still have the same area here as far as a rally-based rally demand zone for possible spread trade on the 4-hour time frame. That's it. Although this is not fresh, we had touched this before. But if the overall trend is still very bullish, let me go to a daily chart. And it is. We're still likely to keep going up until we hit this area of supply. So this is a trade opportunity potentially for corn versus soy. Notice it's 2 corn versus 1 soy. Okay. So I go out and do a little more plotting here. And bring up the chart. CC. December. Spread. ZS. And November. And it should just be 1-to-1. I don't know, it's not 1-to-1, right? It's 2-to-1 for the corn. And now I plot it out again. And I'll put that in as one of my trade ideas, potentially. So I just got to do a little more research on it to make sure it's the right idea to put my students into and for me to get into it as well, because of course I want to trade these as well. So 4-hour chart. What time frames do I use for entry? It varies. I usually use daily or 4-hour, but you can see it's a very bullish trend on the daily chart. And if I go down to the 240, that's where I found that demand zone where I can actually enter right here. And let's see, we got the low, 78.4. It's off a little bit. And the close on this one is 71 even, so that's right. And there's my opportunity. If I go down to the daily chart, or not down, but up to the daily chart, I am definitely going to want to get out before I hit that daily supply that's going to be in our way right here. So I target that area. And I can also look for other things, such as Fibonacci extensions to let me know where things are likely to change direction. We have impulse. Oops, did that wrong. Let's try it again. 1, 2, 3. You can see we're turning at one of those points and probably going to move up to the next one. Requires a little bit of patience. Yes, it does. Yeah, you mean you're swing trading. Could I do this as a day trade? Yeah, I showed you it's absolutely available for day trading, especially on the equity markets. One of the big benefits of doing spread trades over other things is your cost of carry is much, much lower. Remember, when I looked at the margin requirements, when I close it out, I must have. Okay, so I go to File, Trading. Where is it? Margin Calculator. Here it is. So once again, if I want to trade the full size Nasdaq, or then we'll do the micro Nasdaq, one contract long is 1650, but doing this as a spread drops my cost to 1320. We can also look at other securities like the euro, for instance. And take that 6EU22. Okay, one contract is $2,900 overnight. But if I trade this as a spread, drops down to $143 overnight. So either $3,000 to hold a euro overnight or $143. And my performance results from using one full-size contract for every target that I have, yes. So those results where you saw $20,000 or $30,000 profits, that's just one contract for every target. So some of the positions had two contracts, some of them had one, but that's it, yeah. Now, what if I want to do this even smaller? M6E. First of all, 292 to hold it overnight. M6E micro, $14. Isn't that crazy? You can hold two micro contracts overnight for $14. Now, will you be making tons of money? Yeah, but again, percentage-wise, it's very high, so you can actually add in multiple contracts. Not a problem. You can adjust your risk. So that's what I was saying is that we could trade these with relatively low risk, definitely lower than what you would have if you were trading the full-size contracts as a directional. So if I go to M6E U22, oh, sorry, 2022 minus M6EZ 2022, there's the spread. I'll go to a line chart, make it a little bit better. And basically what I would do in this case is if I thought that the futures euro was going to go up in value, and I happen to be on a daily chart, you could buy the front month, September, sell the back month, and you can see it's moved up in value. And that's only $14 to hold that trade. Isn't that crazy? So let's say you caught it right about here. Say you caught it right about this area, 0.0073, and now it's up to 64. Okay, we're on the negative side, so you just got to keep that in mind. So you had 73 minus 64. So you made $9 off of $14 invested, right? Because it was 9 pips basically, or ticks. Oh, actually, no, that's not correct. So it's $1.25 per tick. So it's 9 times 1.25. That's $11.25 you made on your $14 investment. That's an 80% rate of return. You see how cool that is? You can actually get pretty good returns, getting in on the 19th of August till the, September 9th. So the rate of return is going to be much, much higher than directional trading. Your cost of carry is lower. It's just all around a really cool way to trade using those spreads. So I kind of went off topic here. This is what I was working on today. That's why I started talking about the spread trading. It wasn't what I was planning on talking about today, but worked out pretty well. Hopefully you guys enjoyed that. But yeah, this is what I do. And I identify these spread trade opportunities, putting together the video, sending it out to students. That way they can dissect that information and hopefully trade it with success. As you can see, there's plenty of documentation to support you along the way. One of the other cool things is if anybody has any questions, we do a couple things. One, I do a program called Mastering the Spread. And with Mastering the Spread, we regularly get together and it's recorded. Newest ones aren't up. I got to get those posted. But we get together as an open Q&A. We just did one of these recently, and we have another one coming up. But usually every other month we get together and open Q&A via Zoom, so you can ask me questions about the trades. But you notice right here at the bottom, there's also send Brandon a message. And I get messaged when this is notified. I get notified when there's a message every day. So whenever it happens, I get notified right away, so I can answer those questions right away for you guys. So if there's ever questions about trades or strategies or the videos that came out, you get the answers. It's kind of neat. So I don't know if anybody has any questions. I was going to go ahead earlier. My plan was kind of look at the broad market, but like I said, I kind of went off topic here and changed the topic, I should say. I didn't go off topic. It's my schedule. I can do what I want. But if you're interested in wondering what's going on with the broad market right now, we have been rallying a little bit, obviously, after a recent decline from August. And the reason why I'm looking at the big time frame here is because I want to see who's leading us and when we're going to turn. Right now, we've been dropping since August 16th, right? So before I finish up, I'm going to do some analysis here. If I go out to a daily time frame, oops, that's not what I wanted. That's what I wanted. There we are, August 16th. That was our peak in the markets. Come on. Just want to see who is leading us here. There it is. And it's the Nasdaq. It's the leader to the downside. And since that bottom, we are being led to the upside also by the Nasdaq. And that's important to know. One of the things I teach in the emitting think tank is following the leader. So understanding which of the markets are directing us. So if we go to the Nasdaq right now, and we're still in the September contract, we were moving down, being led by the Nasdaq, as I mentioned, and the Nasdaq basically came into demand. So it's not really a big surprise that we had a bit of a bounce, is it? Now, this was a tested zone of demand, so we went a little bit deeper. But here's some interesting things. Looking at the Nasdaq, this is a weekly chart of the Nasdaq. And we're not done with the bear market. First of all, we moved down. We had impulse, correction. And it looks like we're impulsing down. You can see we actually didn't hit any of our extensions. We pretty much missed the targets there. Interesting. But basically, we paused at this demand zone because that's strong. You see what happened the last time we hit demand. We bounced up very high. This time we went deeper in the zone because it's already tested. But there's some key things going on here. Number one, RSI is extremely low. Notice that RSI went below 40 as we came into the zone. That means the move up that we're getting right now will not make new highs. So this rally is going to die off before we hit 13,220. It's not likely to make new highs. As a matter of fact, we can see we are retracing right now. We're likely to stall out at one of these retracement values. We're getting close to 38.2, so we'll see if it's that one or 50%. I wouldn't be surprised to see us turn back down from the 38.2 level. And basically, as long as we don't go above 60, we're not going to be able to make new highs. We're going to see some weakness coming back in. So we're retracing. We go down to the daily time frame now. I'm sorry, this was daily chart, not weekly. My bad. Weekly, I don't think we really saw much there. Well, actually, we did. Look where we came to on a weekly chart. Rally, base, rally. So we were in weekly demand. Notice on the weekly demand, we didn't get below 40. So that's suggesting sideways movement right now. Okay, so we're still moving a bit sideways on the weekly. The daily, as you saw, is in a retracement. So if we want to know how deep we're going to retrace, usually we'll find some sort of supply zone correlating with the retracement values. And as I look back, we don't have any. Interesting. The nearest supply is actually up here in limbo. Right there. So we could use one of these fib levels. This one would not be a bad place to see things turn. But if we do move down right now, we're actually going to take a bounce before we make fresh lows. And I say that because there's too much bullish momentum right here. We were able to get above 60. So what's likely to happen this week is, I wouldn't be surprised. Remember, this is leader, so this will take the other markets with it. We still have a little bit of room to go to the upside, but ultimately it looks like we're going to start heading downward soon. And let's see. Oh, we have a little bit of demand right here. Rally, base, rally. That's where we could bounce. It looks like we might go a bit sideways this week. So today we're still pushing higher, but I do believe that we're going to turn around and start moving down, look for a bounce around 12,415. And because we're not getting below 40, most likely, we could actually break a little bit higher. It'll be interesting to see what happens with this high. If that high does not take the RSI above 60, like this, if this happens, and we see as we come up, we stay below 60, then what will follow is a big sell-off, massive sell-off. By the way, talking back about seasonal moves in the markets, seasonally, the S&P, or all the markets really, let me go back here to MRCI Online. September and October are the seasonally worst market months, usually are the biggest drops. October gets all the big news because that's when the big crashes happen, but September is usually the worst month of the year. So again, if I go to S&P Mini, look at the September contract, and we could go to the December actually as well. It's probably better. And let me go to the December contract because this one closes. So December, there we go. And we'll zoom in. Here it is, September, October. In the last 25 years, it's not showing too much, but you can see right here, actually in the last 25 years, September 18th, everything starts to dump. So we're getting really close to that time. Even the last 15 years or 5 years, you can see on the 15th, everything started to dump off. So we're getting to that point where the markets are usually going to start getting kind of weak at this area. So this is really not out of the question. Now, if, as we bounce off demand, if the RSI happens to go above 60, then we're not going to have that big drop off. We'll probably go choppy and sideways. But if the RSI, as we rally back up in a couple of weeks, can't get above 60, look out below. So anyway, I got to get going because that's my time for you guys today. I want to thank you for being here, and hopefully you got a little insight into the markets as well as the spread trades. If you're interested in learning more about trading spreads, please click on the link and join me in the Wealth with Spreads program. I'd love to have you there. There's a 2-week free trial as well if you're interested. If you do the quarterly subscription, you just click on the link that Miguel is putting out there right now. And what happens is if you do the monthly subscription, you just get charged month to month. Just try it out if you like. However, if you do the quarterly subscription right there, it says register now, the first 2 weeks are on us. You don't get charged. If you decide to cancel within those first 2 weeks, no harm, no foul. You get to try everything. Basically, you get full access with all the videos and everything. So, you really have nothing to worry about if you want to. And then after those first 2 weeks, if you're enjoying it, which I think you will, you just let it bill you for the full quarter and just auto renews every quarter. And you stay at that price, even as I add new things to the program. We never raise your costs ever, and you get locked in at that price lifetime as long as you keep your renewal automatic. And if you do the monthly, same thing, you just get auto renewal. If you want to, there's just no free trial with that one. So hopefully enjoy that. I'd love to see you in the program. If you got any more questions, let me know. If not, trade safe, trade well, and take care, everybody.